Welcome to the Retirement Lifestyle Show. I'm your co-host, Roshan Loungani, here with Adrian Nicholson this week. Adrian, with a fresh haircut, how are you doing today?
Appreciate it, Roshan. I'm feeling good. Summertime, so I'm just going really, really short now. So I'm just enjoying it. New look. So I'm feeling good and ready to go today.
That's great. Stay cool in this weather as it's warming up for us.
Yeah, I mean, it hasn't been too bad, really. Normally in May, it can get really hot in our area, but we've been getting some cool weather recently, which has been nice. I've been golfing a lot, so I've been really taking as much advantage of it as possibly can.
Well, that sounds amazing. I haven't played golf in a long time, so it sounds like you're having a lot of fun. I'd love to make it back out there sometime soon.
Yeah, I mean, anything outdoors right now has just been good with the weather we've been having. So whatever you like, just go for it at this point before it gets super hot around the summertime.
Yeah, the majority of my outdoor time has been on the field at my daughter's soccer games more
Oh,
than
that's
anything
nice.
else. So yeah,
That's good.
yeah. But yeah, it has been nice to get outside. We have some great topics today. We're revisiting some topics we promised to get back to. So Adrian, why don't you start us off?
Yeah, one topic we talked about before was artificial intelligence. And right now, you're seeing some companies really do well as far as their stock price right now. We have people out there that are saying, is this a bubble? Is this not? Is this hype? Is it not? So that's just one area I just want to go back and just have a discussion with you today, Roshan. Just get to know your thoughts as well. Is AI worth all the hype right now? Are these stock prices a bubble or not? And some people are actually really comparing this back to what the dot com bubble was and compare it to crypto rallies and NFT rallies. It's really just being compared to all the hype and all the price increases that you've seen historically right now. So, do you have any initial thoughts so far?
Well, a couple things I saw that I thought were really interesting. One is Nvidia was the first $1 trillion chip stock as briefly yesterday. That would have been on May 30th. It didn't close that way, but it did get there. The next thing that I saw that was interesting is now this is as of May 17th, so as of a few weeks ago, without AI, the S&P would have been negative on the year, and with AI at that point, it was up almost 9%. So you can see uh, the flurry around AI, and you can also see the interest around it, the investment, the markets, following AI space, and we're even seeing products that we use like ChatGPT that are being talked about and used a lot now.
Yeah, exactly. And there's a story out there or a stat out there that shows that there's an AI app that within 2 months had more downloads than TikTok. And if anybody's not familiar with what TikTok is, it's basically like a social media app where you can just go and look at videos and see what people are posting far as content. But you have an AI app that's getting more downloads than a popular app like TikTok right now. So of course that's going to draw attention from a lot of people. And I think this is just a good point just to let our listeners and viewers know is that we're just really having a discussion here. We're not making any recommendations as far as the company or the specific sector we're talking about today. We're really just having a discussion because a lot of people are looking at it, thinking about it, and just wanting to have a discussion. So we thought it'd be helpful to hear what we have to say about it today. So we always recommend you to do your research, consult with any professionals you have when you're looking at this space. That's just the best way to go about it too, because again, it's something that is really garnering a lot of attention from people. So people are wondering if AI is going to be a right fit for their portfolio or not. And that's just really going to vary by the individual. So having a really risk management look at it as well is really important right now because AI, as we know, is just being talked about all the time because of its many uses and applications, which Roshan, you talked about, you're using as well as me as well too, using ChatGPT as a way to just gather more information, do research, whatever it has. It's really fascinating how many areas AI is really impacting right now. I think that's too, you probably agree, why it's being examined by a lot of people.
Yeah, there's so much that it can do, and there are people. You've had multiple people come out and say, we need to be really careful with this or slow down the
Mhm.
pace because of how quickly it's going. But yeah, there's a lot. I think, and tell me if I'm mistaken, but I think the app you were referring to that had more downloads was actually ChatGPT.
Yes, that was it. And
It
for it
was.
to compete along with TikTok is pretty impressive. And just to see how long this will continue is something that investors really need to consider as well. I think one thing that people are really looking at is the IPO market right now. Even though you're seeing a lot of this increase in prices regarding artificial technology companies as well, you're not seeing a lot of new people entering the market right now. So that's something too that you should monitor as well to see if this is something going to be long lasting. And going back to how people are comparing this to the .com bubble, this is where I will start deferring with other people, where with the .com bubble, you're getting all these companies getting these tremendous valuations and increase in stock prices, but they really didn't have any earnings. But in some cases, as far as artificial technology companies, they are experiencing these big valuations, but historically they have been making money. They have strong balance sheets. I wouldn't say all of them, some do. This is where you have to do your research to see which ones would be a big fit. But that's something where you have to really take a look at. Is this company making money? How have they done in the past? Look at their fundamentals. That's stuff that people really should consider, don't you think?
Yeah, I mean, yeah, for sure. When you talk about investment thesis, I think looking into the companies, you've got to look into each one individually, what they're doing, their business plan, and so on. And as you had mentioned earlier, that's why we're not recommending anything. We're saying speak to an advisor, do your own homework. When you talked about AI's impact, I had to look this up because I couldn't remember the numbers, but I found uh, the numbers to just be huge. McKinsey Research Institute said, and this was in 2018, they published this, but they had predicted that 400 million people could be displaced as far as their job goes as a result of AI by 2030. I mean, that's huge.
Mm-hmm. That is a concern right now with AI's impact on the economy as well. And with something, as we know, that gets all of this buzz and is talked about, that's when people in DC really start to lock their eyes on it and start talking about certain regulations that need to go into it as well. So that's also something that why we're having this discussion today that people really need to look at as well. Regulation will have a big impact as artificial intelligence continues, or if it doesn't continue, really impact their overall economy. So that's something that people need to have in their rear view mirror. And I will also take maybe a different stance as well. I know I talked about how this is a little bit different than the .com bubble, but far as a technical standpoint, that's also something that's really grabbed my attention as well. You're looking at a lot of indicators that are signaling a lot of these AI companies, these AI stock prices are entering overvalued territory. So one metric I look at as well is called the relative strength index. I'm sure you're familiar with it, Roshan. This
Mhm.
is something that can show whether a certain stock sector, whatever it may be, has entered either an overbought or an oversold territory. So that's something that people can look at as well, where they do the research, where the definition of the relative strength index is, it, like I mentioned, it's a technical indicator that measures the speed and change of price movements by comparing the magnitude or different degrees of recent price gains and recent price losses. And it's displayed basically as a line graph between 0 and 100, where anything above 70 is considered overbought and anything below 30 is considered oversold. So you're seeing some AI companies go above this 70 mark and get into this overbought territory. So that's something too where people need to consider if this is a good entry point or not. And that's why we're saying do your research, talk to a professional, be careful, or really see how this would play a role in your portfolio, whether it's a big role or small role. This is where risk management is extremely important in this space where you're looking at certain technicals. I'll get into one more other technical, but what are your thoughts so far about that, Roshan?
Well, I was just thinking, not specific on the technicals, just how big an impact that is. Like that jobs number of 400 million. I mean, that's greater than the population of the United States,
Hmm.
right? So you
Exactly.
think about it there. That I think that's why you're seeing, like you're comparing it to the dot-com bubble, or I've heard it called a gold rush in this space. It's because the impact could be that huge.
Hmm. And it is. And I compared it to the dot-com bubble, but it's just something that you always see when it comes to investing and with markets. It's every year, it seems like it's just something new, but over time, it's just one new thing comes out. And artificial intelligence, as we know, isn't really new. It's been around, but it's just something that when it locks hold of a group of investors or it's in the news a lot, it really can just draw a lot of attention. So that's why we really just want to say you got to be careful, do your homework, do your research, consult just to see how this can play a role or maybe shouldn't, and maybe you wait for maybe the next thing that might come along, whatever it may be. But I'll get into another technical indicator as well that I've been looking at is moving averages. These, as we talked about in previous podcasts before, is another technical indicator, and I'll just go over the definition if you're new to this. This is an average of past price points over a specified period of time. And this can help you identify trends, support and resistance levels for certain price movements within a certain investment, which can help you find entry or exit points. And you're seeing a lot of these moving averages just get crushed right now with the recent rally in this space. So these moving averages, there's a term that can be said where there is a regression to the mean, where if a stock goes up so much, it can come back down to these certain moving averages. So when you're seeing an AI stock break above all these moving averages, that's something that some people may say, oh, that's some caution that I need to really look at here, or maybe you just ignore it altogether, depending on other data that you found. That's something else that you should be looking at and considering as well when you do your research on this.
Yeah, I completely agree. And you were talking about the technicals, and we did go over some of the fundamentals when we just talked about the market itself and how much
Hmm.
things are growing. But that's something to look at also, is what's the business model, what's the company doing, just to really get an understanding of what's going on, not only in the space but with the specific company.
Hmm. Exactly. And another big fundamental that people are familiar with is price to earnings right now. What is the stock price now? As we know, a lot of these prices, people are considering them very high compared to their earnings right now. And how much are people willing to pay for future earnings as well? What are they forecasting as well? Are they willing to pay a premium right now for that? And that's something else that you need to look at as well, just to see how far you want to extend those dollars.
Yeah. But yeah, agreed. And do you have anything to add on your data? It's funny where you mentioned this topic today, the AI space. There was an article um, just yesterday about IBM saying they're going to replace 8,000 jobs with AI. So we're seeing that. I mentioned that study that's from 2018, so that's 5 years ago, and with just huge numbers. That's just an example of something happening, right now, and real numbers. And the term I'd used was displaced, because I think there will be a shift. I don't know exactly what it is, but as an example, we actually on our podcast, I think a year or two ago, talked about how McDonald's was replacing workers with those touch screens. So you go in,
Mhm.
touch screen, and click through to get your order there. And yes, that replaces the worker that would have been at the register, but now you need people who can service and maintain those touch screens. So I'm not sure what that side will be on the AI space, but there will be opportunities created, not just job losses.
Yeah, exactly. And I mean, one of the most common ones that we talk about, we use just Chat GPT right now. And I really just compare that to a search engine where you ask it a question and it gives you an answer, or you ask it to do something. And whether it's like coding or whatever it may be, you just have to also consider just asking it the right questions. Because if you ask it something that you really aren't very clear about, it could give you the wrong answer as well. So we have talked about in previous podcasts some of the pros and cons of it. If you're interested more in the cons of it, on how it may not be so great of a technology and how it can be impacted or how to be careful with it, definitely will recommend you check that out. I'll put that episode in the show notes for listeners if they want to go revisit that episode to get more of a definition and an overview of what artificial intelligence is as well. But today, I just really wanted to talk about the current events that are going on with it.
Yeah, and they're definitely a top and very top story and very popular story right now.
And then my last really point that I want to hit home with this is something I talked about in a previous podcast as well, where we were talking about the NFT space, where I mentioned basically, so right now when we talk about bubbles, it really does encompass a lot of things, or maybe a lot of companies or a lot of sectors in this space. Where I see AI technology, I do see some AI companies doing really well and really progressing in the future, but I also see some of them just failing or not making any money or whatever it may be. And that's where I really want to hit home on the fact where it is important to do your homework and do your research to look into this space if you're interested, because a lot of companies may be benefiting from this rally in this space, but over time, their business model, like you mentioned, Roshan, won't hold up to the test of time, or they'll just run out of money, where some will succeed and some will fail. And that's where you really need to have that conversation or look into it as best you can to see if this is a good fit for you or not.
Yeah. We always say that. Do your homework. That's a great area to revisit. As I said, especially right now with what's going on, it's very timely. I've got one that I also think is timely. Just an update on what we talked a few weeks ago, which was banking stocks and looking for opportunities in that space. And I'll just review. Disclosure time again. Talk to your advisor. Feel free to reach out to us. We're here to help as well. But I've been researching bank stocks, starting with just the sector overall. What I'm looking for are there opportunities of companies to buy, as sort of the baby being thrown out with the bathwater. Those are the opportunities we're searching for. And I'll just give you a quick update. So I started out just looking at really the opportunity in the banking space as a whole. Just looking at what happened with Silicon Valley Bank, what are the things to look for and to avoid. And we covered that just a couple episodes ago where we touched on that and things to look at. And then I started that, and I got a list of banks I wanted to look deeper into. There were 8 names on that list. And I started out with one of them, which I'm still in the middle of researching. So no buys or anything done. And just for compliance reasons, I'm not going to disclose the name. But I'll give you an update, and I'll tell you what I found, what I've been learning, and what I see as the opportunity. The first thing, I have a standard checklist I use, which we've also covered on a previous episode. And I started out with that, but I added some items specific to banks in this crisis. Those items were, and actually I'll start at the top because some of these got added along the way as well. But the number one item I added, which I put at the top, is, do I consider this a speculative or a stable bank? And I added that at the top because that's not something that'll eliminate a potential purchase. What that'll do is that'll limit the size of that purchase. So from a full position to more of a partial position. And this one bank I looked at, I termed as speculative for a couple reasons. One is the business that they're in as a bank. Two is I'm also, and this is also something I've added to the list, is their bond rating. So they got to have a triple B minus rating. It did go down slightly, but not significantly. And even if you hear speculative and you hear this bond rating, you might think, well, why didn't you pass on the bank? I think there's more going on, but if you're doing your own research and you don't want any part of your portfolio in speculative or in that type of bond rating, that would be a good reason for you to move on. The next thing on the list, return on equity. Now, this specific bank has a historical median of almost 16% and a 5-year average of almost 19%. An unanswered question I have that I'll need to answer before making any move is how are they getting this such high return on equity? They're doing a lot better than their competitors, and this data point, this return on equity number, that's why I'm looking at them first. What I'd like ideally is a business I can invest in for the long term that can grow just by doing what they've been doing. And their growth using return on equity, what they're returning to me as a shareholder, is a really good number, but is it sustainable going forward? And Adrian, feel free to jump in with any thoughts or questions along the way.
One thing, you probably will get into it as well, but I know some banks out there have some attractive dividends, and with their price going down, it could look even more attractive. But the question is, are they going to continue to pay that dividend, especially if they have issues with their business or they just go under, whatever it may be? Is that something else that you're looking at as well? Or
definitely on the list a little bit further down, but I'll review what I'm first looking at is, do I think the dividend is safe? The dividend being safe, in my mind, means it can be covered through their operations, and they aren't paying out more than they can sustain. Not only is it covered by their operations, but they're also retaining enough capital to continue growing their business. Because if I want this return on equity number to stay as high as it is, but they're giving all their money back to their shareholders via dividends, it's not going to be able to hit that target. So that's a good one, Adrian. A very important one. The dividend being safe, I think, is also important, because if I am looking to buy, I am wondering, is it a good price now, a good time now, or should I wait? Will it get cheaper? And if they end up cutting their dividend, I think you would see their stock price decline. So that is an important one with the dividends. Yes, the numbers are going up. Are they safe? What have they done historically? Can they maintain it? And what have they done just recently? Are they continuing with their dividend, or have they given any kind of guidance to make it feel not safe? So this particular bank I'm looking at, the dividend looks safe, and then I also looked at their dividend payout ratio compared to their competitors, and they end up they're actually about half of their competitors in a dividend payout ratio. So that's another thing to make me feel like they are paying a safe dividend. And going back to what I'd said earlier about investment type, is it speculative or stable? And then the position size. This is one thing where I would take position size into account or limit it. If I think the dividend's at risk, I might, but I'm not sure. I think the dividend's at risk, but I'm not sure just based on the data. I might still look at buying, but I'd want to make sure I buy less than my target, so that if there is a dividend cut, I could add to that position later.
That's good. And then my other question was, and I'm sure this may be on your list as well, is a size a bit consideration depending on like the bank size? Because as we know, there's, especially in the banking sector, large versus medium versus small size is a big consideration on the business as a whole.
It definitely is. And once I get through all those names on my list, I think I said there were 8 of them, I will, size will make a difference, particularly on the position size. I started with this specific bank first because the return on equity number is so high compared to its competitors. So if I want to buy a business that's going to continue to grow, or the term used, we'll use sometimes as a compounder, the business will continue to grow internally, and ideally forever, they can keep growing. That's what I want. So when I look at this banking crisis, I'm not looking at the names that have dropped the most or anything like that. I'm looking at it and I'm thinking, okay, can I use this as an opportunity to get a good price on a good bank that can keep growing as it's done in the past? So I am looking at the size. It's just as I'm allocating my time, the size factor is not the primary one. There are big names on the list, and they seem like they'd be a little bit safer, but the smaller names tend to have declined a little bit more, so they may have a better opportunity. And then when you add on top of that the business itself and the return on equity numbers, that makes me more interested in starting there. Next on my list, that always there whenever I'm looking at, is valuation. And banks oftentimes you'll look at a price to book value number, and what I'm looking at here is where is it now and where has it been historically. So this specific bank is trading well below book value, and its historical trend line actually trades above book value. So that to me is I'm always looking for a good business at a good price. The good business, at least the starting point, is that return on equity for me, for the banks, and the valuation. Is it a good price? And with it trading below book, a good price is important. Next, this is something that a bigger concern with this current environment of what's going on, but how much of their deposits are uninsured? A big issue with Silicon Valley Bank was they had the highest uninsured deposit rate, so the highest amount of deposits over 250,000, and people can move that money so quickly now with their phone that the uninsured deposits, that's the bank run, right? Everyone trying to pull their money out at once, while the uninsured deposits are what the biggest risk factor are in that space. And that's something that's been added to my list. This specific bank had 21%. And they've been able to bring that number down, which gives me confidence in the bank and in the management team, the fact that they've been able to lower their risk. Next, I want to look at how much is the commercial loan portfolio as a percentage of their loan, and looking deeper into that commercial loan portfolio. The reason being, there's a lot of talk that the next shoe to fall in the banking space is commercial loans. The fact that you have a lot of office spaces that are vacant, companies needing less office space, people wanting to work from home and working more from home. So when these commercial loans mature and they have to be refinanced, is this bank at risk of having to take over the properties, or the people they're lending money to defaulting on their loans? So I want to figure out how much of it there is. And in addition to that, I want to dig deeper, and all this information is available in their annual reports. I want to dig deeper into what the loans are. So in this case, they were about a third of the portfolio. And then I also am looking at how much of their capital are invested in held to maturity type loans. That's where a lot of the long-term government debt would fall under. That's where Silicon Valley Bank put a lot of their money, and the increase in interest rates, all the Fed rate hikes, caused those long-term values of those loans to decline significantly. So once again, if they've got to sell those loans, those bonds, to give money to their depositors, they're going to take a loss. I want to know how much is at risk. And in this specific bank, it appears to be a safe number. The other thing I added on too was their capital requirements, how much they're required to keep by the regulators versus how much they have. And I'm looking for a bank that's got more than as decently significant amount more than their target percentage. So this specific bank I mentioned, that I'm looking into, they met all this criteria well. Some of it, I wouldn't say with flying colors. So there are definitely some things that are questionable that I'm digging further into. However, they've met the requirements I want, at least good enough for me to continue researching. And as I mentioned to this point, not a purchase yet. So good enough to research, not necessarily good enough to buy at this point. But beyond that, specific to what the categories I mentioned, which I'd call sector risk specifically in this current market environment, then I just have transitioned over to my regular checklist, which the high level categories are looking into the business to understand the business, looking into management, looking into what could go wrong, looking deeper into valuation. I mentioned price to book earlier for valuation. That to me was, am I getting a good deal? The next stage of valuation for me is what do I think the business is worth? Am I comfortable holding it for more than 2 years? Why do I think I'm right and the market is wrong at this time? And then what percentage should I buy? And as I mentioned earlier with this specific one, because I'm viewing it as speculative, I'm going to be looking at a smaller position as it is. And then my final category is just notes of what else I need to look into. And I'll just read some of them for this bank. They've been growing really rapidly. How have they been able to do that? And can this last? Next, something I don't like that I've got to look into is their share count's been going up. And I want to know why and to see if this trend will shift. Interestingly, on their last earnings call, there was a question asked them about will they buy their shares as as the share prices come down? Will they do some share buybacks? And the management gave an answer that I think is perfectly fair in this environment. They had said, no, they're not doing buybacks because they think the most important thing is to keep their balance sheet solid at the moment, which I agree with. If they do have a lot of withdrawals coming in, they want to be able to meet those withdrawals and keep the bank running. The next two questions I have is they had a couple acquisitions in the last few years, and I just want to evaluate, do I think they paid a good price or got a good deal for them? Because in my mind, that's another issue with management, right? Is if management's overpaying for acquisitions, that's usually not an investment I want to align myself with for the long term. So as I mentioned, I don't have a conclusion yet. I've just jumped enough hurdles to continue researching this. Once I'm done with this one, I will move on to the next names on the list as well. Adrian, do you have any questions? I know I just downloaded a lot of information on you at once.
I mean, it's a lot of great information. It's really interesting just to see how you go about the whole process, and can't wait to hear more about it.
Yeah, and once I finalize it and we actually are able to buy some banks, or we move on and say we didn't like the opportunity, either whatever it is, I'll be happy to share an update with everyone. And Adrian, I liked your topic today, really as well. AI, I think with both of us covered what are getting a lot of headlines now with artificial intelligence and the banking sector as well. For those of you listening, thank you for joining us. This has been another episode of the Retirement Lifestyle Show. We'll be back next week. Please give us 5 stars, like, subscribe, tell your friends and family. This has been the Retirement Lifestyle Show.